What's up, YouTube? It's your boy Rome. I only took 2 trades this week. Both of them was winners, but they came from completely different setups. Let me show you what I saw. So in this market, we got to be reactionary. I'm a reactive trader. So first things first, what I want to do is I want to start out the daily time frame like always. I go through a top-down process. The first day we're going to talk about is this Monday, March 30th. So first things first is I want to draw out my previous day's high, low, and midpoint. I use a Fibonacci tool to do this. So we marking out previous days, March 27, high, low, and his midpoint. Then I want to mark out my requisite swing highs and swing lows, as well as fair value gaps, if there are any that are near. In this case, first thing we're going to come up on is the swing high or the swing low. So scale down to the 15-minute time frame once I have these marked out. So what we can see is I only start trading after 9:30, after New York open. Both of these trades that I'm going to show you happened on gold, and even with gold, I like to trade after 9:30 because I realize a lot of volume tends to come into the market at this time, and it kind of helps me avoid fake outs a lot of times. So first things first, I can see that price came into the day right here, and we went lower below our midpoint, then we went above the midpoint, started trading higher, getting closer to my time, which is around here. 9:30 is when price opens. What I can see is we had this fair value gap that price bounced into during pre-market that sent price higher, right? And then we also created another fair value gap off of that fair value gap. But we didn't come up here and take out these highs. So that's a cause for pause. I see that we put in a swing high right there. And then at 9 o'clock, we went above that swing high. And then we closed lower, right? Down in here near this fair value gap. All right. So once I seen that, I'm like, okay, why is price not wanting to go higher here? Then at 9:15, price also bounces below that previous candle's low and then closes a little higher. We tried to go higher, and then you can see we reverse. All right, so once this is happening, I'm thinking to myself, okay, we've already came in, we went pretty high. We don't look like we have enough energy or liquidity to get to these highs. So I scaled down to the 1-minute time frame, and I want to take a closer look. All right, so on the 1-minute time frame, what we can see here is at 9 o'clock, we swept that 15-minute swing high, and then we have a candle closure right here below the candle that took out the swing high. This creates our origin or original order block. All right, once we get that candle closure there, price tried to create a continuation order block coming into this fair value gap here, and this is all pre-market. You can see that we did try to go lower, but look, we swept out that continuation. All right, so that's something I take a note of. We sweep out that continuation, and then we have a lot of selling pressure coming into the market here. So I can't catch the original order block play because it's before my trading time. And then I'm not catching this continuation, the first continuation, because it's before my trading time. So I saved myself a loss from trying to catch this continuation by waiting. Price comes down lower, aggressively going below the previous day's high, as well as below the 21 moving average and the 200 moving average. So once this happens, I see that we leave a fair value gap behind. All right, so once price comes up into this fair value gap, I'm waiting for a candle closure below this series of up candles here. Once we get that candle closure below that series of up candles, now I have my entry, right? In this case, I did allow price to come up just a little bit and tag me in. I could have just entered right here, of course. But first take profit is reached at the 101. Once we get to the 101, I move my stop loss here to break even. You can see price did come very high up and close to knocking out that break even, but we did ended up continuing to go lower, right? And my second take profit, as always, is at that 1.9 R. The price got close right here, then came back up, and then we eventually smacked that 1.9 R right here before going and taking out all of these equal lows over here. All of these equal lows. This is a lot of liquidity sitting over here in this area, right? So price did have a reason to even go lower, which is very, very strong for me as well, because I'm getting out well before we even touch these liquidity pools. Now, I could do a little better of, if I'm able to have more than 2 contracts in, letting some run to get more of this liquidity over here. But a lot of times I see that price tends to hit my target and then have a strong reaction in opposite direction. So I'm okay with getting out. So this first trade was a swing high sweep, right? The liquidity came from the sweep of the swing high. And let's break down the second trade, which is going to be pretty much completely different, but at the same time the same. So let's scale down. Let's remove everything quick. So now we're going to be looking at March 31st right here. And first thing we want to do is mark out our previous day's high, low, and midpoint. Then we want to mark out our swing high, and then we want to mark out our swing low. And in this case, we're getting closer up here, so we want to mark out this fair value gap as well, because price tends to draw there. So that's another barometer of like, okay, price is probably going to draw higher, because if we don't respect this swing high, we're probably going to draw higher. All right, so now let's go down to the 15-minute time frame. And what I can see is, from a pre-market standpoint, price came in. We went lower first, swept out these swings, and then we had aggressive buying up there to that daily swing high. Once we got to that daily swing high, you can see liquidity was held there. We kind of tapered off a little bit, and then we consolidated before sweeping out this consolidation and going higher, creating the order block, as well as leaving behind this 15-minute fair value gap. All right, so 9:30 is when I start looking to trade. You can see at 9:30, we start buying up right here, respecting this fair value gap, and also creating another order block. And then price goes higher at 9:45, and then 10 o'clock is when we finally get a creation of a fair value gap. So we have this fair value gap creation right here. And then also we can see that we are sweeping out the original 9:30, which is, this would be considered as Asian high. We sweeping out that high after the creation of the fair value gap. All right, but in this sense, I feel like we have more buying pressure going on. So what I do is I scale down to the 1-minute time frame, and this is, once again, it's all about reaction. How is price moving? What setup am I getting here? All right, so first thing I see once I scale down to the 1-minute time frame is, all right, you can see this was the 15-minute swing high that we reacted off of. We start going into this consolidation period, and then what I can see is that we stabbed into this 15-minute fair value gap. Not only did we stab into the 15-minute fair value gap, we also stabbed into that previous that daily swing high that we had marked up. And look at the nice reaction off of it. Once I seen this, I said, okay, this is clean. And then another thing that happened is, once we got the candle closure, we closed above that 21 moving average as well. So I'm having a lot of confluences in my favor, right? So that's 3 different confluences. We're bouncing off the 15 moving average, we're bouncing off the daily swing high, and we just closed above our 21 moving average, and we're already above the 200 moving average, saying that majority of this is bullish. Okay, once we get that candle closure there, I was okay taking this buy position. As you can see, once I bought, price did come down and disrespect this fair value gap before continuing higher. And so my first take profit was the 101 right there. We got close to it, and then we pulled into this fair value gap before hitting the 1-to-1, and then the final take profit was that 1.9 R. And in this case, you see we just tagged that 1.9 R and then reversed all the way back down to the stop loss. So I did get out my full position here, and right to the T is how I exited. And so that was the second position. And it's pretty funny that the first position was a swing high sweep with a fair value gap order block entry, and this second one was a fair value gap play off the 15-minute time frame with a 1-minute sweep, right? So it was the same but different, right? My trades are the same but they're different at the same time. It's all reaction based. One was a sweep of a swing high, the other one was a fair value gap play, but the entry one was a fair value gap entry, while this one was a sweep, right? But still order block as my entry. So that's all I really had for this trade. You know, even though the setups were different, the ideas were the same. We want to wait for price to come into these key areas of interest and react. For me, that's the fair value gap, that's the swing high, and also sometimes supply and demand. So that's all I really got for this video. Hopefully you got some value from it, and I'm out.